For me right now, price is trapped within London's range. I don't want to take any trades unless we are at the extremes, which is either London's high or London's low. It's very clear that they are engineering sell-side liquidity down here. If you take a look at NQ, we have relative equal lows as well, and we have this relative equal lows as well. I don't like the fact that we have traded above yesterday's high right at open, and price is in a consolidation. I don't like the fact that I don't like to go long in this type of scenario when we have taken out previous day's high and we are basically above the previous day's high in a consolidation. So what I can do right now is just to wait. And if you take a look at the daily time frame, we have actually traded into a daily CB. Therefore, I'm much more leaning towards taking out sell side liquidity rather than buy side liquidity. Yesterday was a large range day, therefore my expectations for Wednesday is not a lot. I would be treating Wednesday as a low probability day. Therefore, if I want to take a trade, I would like to see most of the requirements met. Very simple. This seems to me right here that it wants to take out this high. Whether or not it leaves London's high like this intact, I don't know. Therefore, I'll have to wait. I won't trust any SMTs for today on the lower time frames. Nasdaq is going to trade into its 4-hour CB very soon, so I'm keeping a lookout on that. If you're watching my videos, don't expect too much commentary from me unless it's something that I think it is important to mention. if I'm ever going to take a trade for today, I will only aim for the session highs. Session highs meaning the previous session's highs and lows. So in this case, that will be London's highs and lows. If I'm really going to force it, this is a proportion of the block, and I want to see this wick support the price to go higher. First target is right here. Second target would be this inefficiency here. I don't really want to see any candle closing below the consequent encroachment of this wick here. And the last defense would be this level here, mean threshold of the proportion on the block. Alright, so do keep in mind, right from the start, I'm anticipating lower prices. Right. But if we take out the target down here first, before this high here, it is very reasonable to anticipate this to be the next target if we take out this target here. So it's a scenario whereby it's either this or that and then. So that's how I'm gonna play today. If this current candle can close below this green candle here, I think we are most likely going to go lower from 10 o'clock onwards. Alright, so we do in fact get that closing price below the green candle. If I'm going to be aggressive, I'll look for shorts on the 1 minute time frame. Right, so the best shorts will be, I think, this fair value gap here with a stop loss above this swing high. Looking for London's low, and I would like to see speed below this lows here. So it's going to be something like this. To here, where's London's low? Right here. What is the risk to reward? 2.47. Yep, I'm not going to take this. As I've mentioned before, I would rather wait until we trade into the range extremities. Typical consolidation chop you up profile. Q2 took out Q1's high and low. This quarter here, I want to see if it wants to take out Q2's highs or Q2's low. Alright, so right here we even have a fair value gap. Alright, so for example, if I would have shorted this fair value gap here, I would have end up being stopped out. This is why it's very important to have the higher time frame narrative behind you, and that is also why I said that we're in a low probability condition, right? I'm not looking for in a consolidation, you're not looking to open up positions in the 50% of the current dealing range. So the current dealing range is London's high and London's low. As you can see right here, we're just trading back and forth to 50% level, right? That's not something that you want to be taking risk on. Anyways, the main and the original idea still stands. I'm waiting for London's high and London's low to be taken out, either one, right? So far it looks like price is going to take out this high first, right? I have no problems with that, and ultimately if it takes out the London's high first, that would be great as well, because my overall bias, I'm leaning towards shorts because we have taken out previous day's high, and yesterday was a large range day. Therefore, I'm not expecting continuation. Large range day trading into a CB, so I'm looking for retracements back into the previous candle's range, at least 25%, somewhere around here. That would in turn give me that 4 hours fair value gap right here. 4 hours fair value gap, low hanging fruit. I would love to short into that, and from here what I think is that price is going to run higher. If you look to the left, we have this inversion fair value gap. So I think price is going to utilize this area to send the price higher, and if you want to force it, you can use these consecutive down close candles as your bullish order block. Highest high to the highest body, map it out, 50% of the wick, that is good entry point, but as you can see, low risk entry, which means low hanging fruit entry, that would be at this high right here, and it comes in at almost exactly 25%. So I think this is a valid area to look for longs. Okay, as also we have SMTs on these highs as compared to NQ. NQ's price action looks slightly better. Right, so in my opinion, because we have closed the candle below this up close candles, these two up close candles, to me they are like proportional order blocks. So if I use this low to this opening price, 50% of the wick here, I think it's a good entry. But for stops, you really have to deal with a dip retracement if it ever comes back. So personally, I don't like that. Therefore, I would rather wait for something on the other side, which means this low here. Alright, as you can see, this is quite a deep retracement. Not something that I would like to endure. Right, fully filling this entire wick. Interesting. 1 minute. $30. Alright, so if you're somehow or other trading on the seconds chart, low hanging fruit objective would be this low right here. Alright, this low, and it's probably going to expand into this volume imbalance right here. If I really want to take this trade, I mean, the first requirement that I want to see is a 1 minute swing high taken out, and then 30 seconds market structure shift to take out this lows here. I think that would be the best play if I really want to do it. Alright, other than that, I'm not interested. Alright, so we have taken out this 1 minute swing high here. On the 30 seconds chart, I want to see if we have a shift or a change in the state of delivery. If price close below this this green candle here, that would validate shorts. Right, so let's just say I short here, stops will be up here. That's about 10 points. Looking for this right here, 10 points as well, maybe extension down into 20 points. Right, I mean, that's how I would play it, but I don't like to trade like this when the higher time frames it's unclear. Okay, so we have closed completely below this candle here. Any retracements into this opening price should be a valid short. Right, that's one entry there. Right, this is a second entry, trading all the way into this order block here. Stops is above this down close candle, but as I've mentioned before, low probability. I'm not in a hurry to open up any positions. Right, look at how reluctant it is going to go down. Any price, any green candles closing above this down close candle here, it's probably going to take out this swing high to go higher. Alright, so I would have cut my losses here. Right now it's gonna run into this swing high here. After trading down into this order block, if it wants to. It doesn't need to, but if it comes down here, it's a long opportunity to go higher. I mean, you're just scalping on this time frame here. I don't think it's very practical. Alright, so we have taken out another swing high. So same thing here, right? Any closing prices below the midnight opening price will be a valid, you make this a valid order block, right? So that is what we got right here. This order block should not be closed above 50%. If it does, then obviously this is a low probability order block. Right, so this candle managed to close below 50% mean threshold. Right, there you go. Very tough conditions. Very important not to get sucked into this lower time frame chop. Right, so this quarter here, it looks like it's going to be an inside candle. It's going to end in 5 minutes. Another rule or requirement of mine is that whenever price is below midnight or below daily open, I'll try my best to not short, and vice versa. But I'm usually using the daily opening price. So because right now we are trading above the daily opening price for NQ, I'm preferring to short NQ. For ES, we're trading below the daily opening price. I'm preferring to long ES. Right? Makes sense here. The price action for NQ seems a little bit much better as compared to ES. So if I'm gonna open up any positions today, I think it's gonna be NQ. Right? Well, let's see. This is looking like a high resistance liquidity run. Got this CB here. Until price can trade above this CB, I think we're going to go lower. For entry wise, it's going to be a little bit complicated because there's nothing to key off from. So I just have to wait for a stop hunt on the 5 minutes if it is a true high resistance liquidity run. On the 1 minute, it's pretty clear here. 30 minutes. No, I try to keep it at 5 minutes. I'm gonna try to keep it at 5 minutes because the lower time frames, I mean, during a high resistance liquidity run or high resistance environment, the lower time frames PDAs don't really get respected. So I'm gonna stick to the 5 minutes. Let's see how this goes. 10 o'clock. Opening price is right here. Best case scenario, I get a short entry above 10 o'clock, banking on the power of 3 of the 4 hours candle. One minute stop hunt, shift in market structure right here. Right, relative equal lows down here. Volume imbalance. What's the risk here? 13 points. 260. 3R. Looks pretty good. Gonna take this. Because it has closed below this up close candle here, that is when I knew that my orders are probably not going to be filled. But let's see. After all, it's high resistance liquidity run. It might want to come back into this area here. Right, volume balance. One minute right here. Any closing prices above this CB here, I'm going to have to cut my loss. I want to see it run all the way down into this lows here. If this is a green candle, I want to see the next black candle be an engulfing candle. Alright, so this is not a green candle here. Running below this low, I'm gonna shift my stops here. At this point of time, I don't want to see any closing prices above this consequent encroachment. I'm demanding a lot from the market. If we have a closing price above the consequent encroachment here, I'll cut my position as well. 30 more seconds. Right, so if this is a black candle, it should close below these two candles here, at least below this low. Alright, once it takes out this low, same thing, I'm gonna shift my stops here. And once it closes below this low, but it does not take out this low, I'm gonna shift my stops as well. Alright, I'm gonna shift my stops here to this high. So right now I am risk free. If it comes and stop me out, so be it. Alright, I'm done babysitting my position. Right now it's just a matter of time. Once it takes out this swing low here, I want to see speed. If it closes above the two candles, right, consequent encroachment here, I am probably wrong and I would cut the position as well. Okay. If this is an up close candle, it should not close above this down candle. So we have a green candle right now. I would like to see the next down close candle close below this green candle here. Okay, so what this is basically telling me is confirming that the order flow, I'm confirming that I am in sync with the order flow. Okay, so this is very important here. Right, so because it has taken out this swing low, I would like to see speed. So I don't want to see any prices closing above this low here. I mean candle closing above this low here. Right, so far we got what we want. I'm going to shift my stops again to right here. Mean threshold, I mean not mean threshold, but consequent encroachment above this wick here, and it's also above the mean threshold of this candle. Same thing here, I don't want to see any up close candles closing above this or the block here. So right now my validation is this high here. Right, to be honest with you, if I don't see any speed below this low, I'm gonna cut my position as well. Five, 4, 3, it needs to close below 2, 1. All right, I'm gonna close, take my profits. Right now I am in profit of 107 from the previous losing position, which is 408, right? So I am taking profits right here instead of waiting for the final target is also because I was in a drawdown. Okay, if I wasn't in any sort of drawdown, I will hold and wait to see if price wants to reach to my final objective right here. But because I'm drawdown, I'm just going to fix my mental capital first, right? So that comes first. So because I am using this one trade to break even from that drawdown, therefore it helps me reset. If tomorrow there's going to be a trade, it resets my mental capital, right? So to me that is very important. So as you can see, because we do not have a closing price below this swing low, price got this huge retracement. I think eventually it's still going to go down into this low and into this daily opening price, but this retracement might just mess me up, okay, due to the fact that I am having drawdown on my equity. So with this, I hope you enjoyed this session here, right? Right now let's just see if it reaches into my target here and my overall target right down here. Okay, on the 5 minutes, right? So I think this low, I place my limit order here because we have relative equal lows. We have this fair value gap as well. Ultimately, this is the low that made this high, and this is the low that made this high. So taking out these lows here, naturally I want to see speed into the daily opening price. Okay, so here is the business for proof, right? Right now let's just see if it takes out, reaches into my target here. Speed below these lows, okay? Right here, as you can see, we are still not taking out the low. No, it did take out that low by, I think, one tick. Yep, one tick. And then it just decided to retrace. Typical. Alright, so on the 5 minutes, what do we actually have? We have an implied fair value gap. Where is it? This color here and this color here. So this is an implied fair value gap. If price ever comes back, I'm anticipating another shorting opportunity, but obviously I personally am not going to take it, okay, because I've already done what I need to do for this session here. Right, so price is here just as we were speaking. On the lower time frames, this is another implied fair value gap as well. on the 30 minutes, you should want to see a change in the state of delivery. As soon as a down close candle closing below here, I think we're good to go lower. Okay, we're not having that yet. It might want to run this high into this volume imbalance here. Okay, ES is free falling. However, the price action is kind of wonky when you are using the daily open. Right, so for ES, let's take a look to see if we have any if we had any opportunities. Okay, so right here, trading back into this fair value gap on a 1 minute, it did come back into this level here. This volume balance would be my entry, stops would be here, and how much points would that net? Ultimately, I'm looking for London's low and this 4 hours fair value gap. Right, so for London's low, that would be right here, 6 points. Oh, the risk to reward, oh wait, it's the wrong one. Let's see, I'm not sure if I would have gotten a fill here. Right, but let's see what is the risk to reward. The risk to reward is 2.18, risking 2.75. That is about $300, and eventual final target, that would be 4R, 11 points. That is around 550 for one ES contract, and obviously I'm only going to play one, so I think NQ was a better bargain. Okay, right, so let's get back to NQ. 30 seconds chart. Right, so same thing here, any closing prices below this green candle will validate shorts into this level here. So right now we have it. Any price trading back into this down close candle here is a short. Stop loss will be this high. Let's see, right here. Okay, looking for this lows and this daily opening price. We have a fair value gap here if it ever wants to come back into this down close candle, but to me personally it should not, right, because we are really near the target. Below this low, you want to see price teleport below this low. Okay, as you can see right here, not teleport to the upside but to the downside. Okay. Right, so as you can see, this is quite a lethargic price action here. Well, from here to here, that's about 20 points. You couldn't complain about this, right? If you're just scalping. So 20 points, no, less than 20 points, sorry, it's less than 20 points. 20 points are right here. All right, coming back up into this order block again. And don't tell me it's gonna reach into that fair value gap and then continue with the collapse. I don't think that's a good indication that it wants to go lower. So even if it trades up into this fair value gap here, personally I do not want to see a closing price above this candle's high. Okay, so it should just be like a snap drop or tag drop, okay, but best is that it doesn't even come back at all and it just drops. I don't like how we have two down close candles that are not engulfing this green candle here. This candle here is very crucial. If it does not close below this swing low or trades below this swing low, then it's a low probability. We might just want to trade higher. Right, so we did in fact was not able to take out this low here, so I think we're going to go retrace deeper. Imagine this retracement here when I was short here and then coming back down into this low and then retraced up again into this old tick profit level here. It's frustrating. Alright, so as you can see, we're quite reluctant to go lower. Quite reluctant. Alright, finally. You don't want to see any down close candle closing above this swing low here, okay? It should just close below this swing low and then expand slower. Yes, something like this. So this candle should expand lower. Alright, it's leaving the target here. Alright, finally we have reached our target. Alright, beautiful, but not a beautiful price action here. Lots of resistance on the way down. So hypothetically, if I was to be in this trade here and I didn't have any drawdown and I just place my stops at break even right here, the risk to reward would be, how many points is this? 46 points. 46 multiplied by 20, that's 920 points. I mean $20. So I mean, this is one very important point from which you can learn, right? So I mean, what I'm trying to say here is mental capital is very important, right? Without the mental capital, I can't hold the trade all the way to the final objective. So that's the difference. So whenever I am in deficit of mental capital, I would much prefer to bring it back to full tank before taking on a trade and let it ride to that terminus point, if you get what I mean here. Right, and this level here is it's low hanging fruit actually. All right, because ultimately I'm looking for London's low. Right, so London's low is the final terminus. At this point in time, because my entry was around here, my stops would have shifted to this up close candle. Right, so either way I'm going to be in slight profits. Right, it can come back and take me out before trading lower because we have yet to have a closing price below this swing low, and until we do so, there is always a possibility that price would like to come up into this implied fair value gap. But once price closes below this swing low, we should not want to see price trade above this up close candle. So as you can see right here, we did not have a closing below for now. We have 1 more minute left. All right, we're gonna watch. We're gonna watch if we do, if we get any closing prices below here. Okay. Wait, 30 more seconds. We do in fact not close below this this swing low here, so I think price is going to retrace quite hard. And if you take a look at ES, we have basically SMT on the lows, right? So that's not something that you want to see if you're in a short position. But I think that this is pretty much it, right? I have low expectations for this session anyways, but as you can see, the logic still stands. Once price takes out a liquidity, any closing prices below the last up close candle or the subsequent up close candle, which we have right here, this closing price, look for a entry within this green candle here. Okay, and that's where the 5 minutes implied fair value gap is, and it's probably going to be a high probability entry to take out near-term objectives, like let's just say the equal lows down here, and if you really want to force it, the rejection block. All right, and I think eventually we are going to trade into this low here, and this final target here, it's a volume imbalance, so that's why I place my targets right there. We have SMT on the highs as well when you compare it with ES, and from here I can show you that right from the start of the session I was looking for lower prices because we have taken out previous day's high and we are consolidating. Price is not expanding higher. So to me this is like a bull flag, and for bull flags usually I will look for it to fill, and this is what it is what as I anticipated so far, right? So really nice session here. Let me just update the P&L for, I mean, in case I missed it, right? So anyways, P&L for today, it's 515. Right now my equity is $50K and $100. Okay, tomorrow and Friday should be a better trading day, but I'm not sure if I'm able to make it for the sessions. We shall see how. All right, and yeah, patience pays. Pays to be patient, and it pays to be on the higher time frames instead of the lower time frames. All right, classic seek and destroy. Indeed. Alright, I'm gonna end the stream here. There's nothing much that I want to commentate about. The trade has already been done, and I'll see you in the next one. Signing out.